Stellar set of earnings, but you've already cautioned that this could be the peak and things will be softer going forward.
Yes, I mean, what we've seen in the first half has been the benefit of a strong run-up in pricing in North America and in Asia. We've seen prices moderate towards the back end of the half, and we're guiding towards a softer half on the back of those lower prices.
One of the things that you've flagged is concerns over China, or the slowdown in China. It's your second biggest market in terms of revenue. Does the latest developments in terms of positivity on the trade talks, a delay to the higher China tariffs and potentially an actual deal being struck between the two countries, does that change your level of optimism on whether demand is going to perk up from China again?
Yeah, I mean, clearly a resolution of the trade tensions is in everybody's interest. The drag on demand has certainly had an impact. So from our perspective, positive moves in that direction are a good thing. Our business in China, we're on the ground in China, and we have a focus around coating steel products and buildings. We're still seeing quite strong levels of demand within the country, but clearly a resolution of the trade tensions is in everybody's interests.
Looking to possible growth around the world, Mark, you've been talking about this expansion in the United States, $600 to $700 million for the North Star mill. Give us an update on what's happening right now there.
So the planning is well progressed on that. We've committed in this half to spend about $50 million to finalise the engineering work and the proposal to go forward. We have quite a structured process around large capital expenditures like this, and we're working through that. We're encouraged by the strong underlying demand in the US. We still see very good levels of economic activity. It's a fine asset. It's an asset we're very happy to have in the portfolio. And whilst it's an expansion at North Star, we're a very small player in that market. We only make a couple of million tonnes, and we're looking to add to our existing facility as a brownfield expansion. So more work to do, but we're getting closer to a final decision, and we would expect that announcement to come in the second half.
All right. With investment in the country, you know, of course, that President Donald Trump likes to hear about jobs. Is there anything you want to update us on in terms of job additions with North Star?
Look, certainly an expansion of that nature will require more employees, which is terrific. We have a bunch of very motivated and very incentivised employees in Delta, in Ohio. I would say, though, that we've been expanding our buildings business as well. So our buildings business, which is based out of Kansas City and does pre-engineered buildings for some of the biggest customers in North America, has been busy, and we've been adding employees to that business as well. And on the West Coast, we have a coating facility which equally adds value to raw materials and puts that into the final construction markets. And we've seen some expansion there. So the strength in the US economy has allowed us to increase levels of employment across the country, not just at our North Star mill.
Mark, I think it goes to the broader question of how, I'm wondering how you found the political situation in the US and the policy making there. Has that been favourable to the way that you've been able to conduct the business strategy there?
Well, again, our customers are industrial customers across the country. Certainly the feedback we get from them is that they're busy, and the investment environment is a positive one. Certainly the growth in areas like internet shopping, data warehouses, all of those sectors have been really quite strong for us. So the economic settings that are in place are having a positive spin-off for our customers, and that means more production and more employment for us, which is a great outcome.
Mark, there's a report recently suggesting that BlueScope will be considering using Brazilian iron ore instead of Australian iron ore. Tell me, in the context of the spike that we've seen in prices following the Vale Dam disaster, and whether you expect that shortfall to continue, and is that in fact an option that BlueScope is considering?
Yes, I mean, that report quoted some facts and I think drew some parallels that weren't necessarily accurate. We're we're in the process of coming to the end of a long-term supply agreement with one supplier of iron ore in Australia, BHP, who have been a terrific supplier for us for some 17 years now. That's a legacy contract that came out of our spin-out of BHP back in the early 2000s. So we're reassessing how we'll acquire iron ore going forward. The iron ore markets have changed dramatically, obviously, over 17 years, as have the coal markets. And no one really writes long-term contracts for internationally traded commodities anymore. So we're coming out of a legacy contract. We're looking at our supply arrangements going forward. We anticipate that a large percentage of our iron ore will continue to be purchased from Australian sources. We have purchased some iron ore from Brazil in the past, but not large amounts. And as we've purchased iron ore from other parts of the world as well. So the story probably didn't understand the context fully of the fact that we're coming to the end of a legacy contract and looking to recontract our iron ore supplies.
Well, appreciate you clarifying. In terms of the elevated pricing situation for iron ore as a result of the dammings disaster, do you expect that situation to continue, and how does that change the outlook when it comes to your cost management this year?
Yeah, I mean, that's very hard to read. I mean, the terrible tragedy that occurred has obviously had a short-term impact on pricing as some of the supply shock is absorbed by the market. How that plays out in the medium term, it's hard to tell. We obviously play a spread game, and increases in our raw material costs need to be passed on through prices in finished goods. So we try not to. We don't really have the ability to forecast iron ore and coal prices. That's a difficult thing to do. What we tend to try and do is recover any increases in costs as quickly as we can. But certainly the short-term spike on the back of the supply adjustment has seen prices rise.